And in East Africa, Kenya is reviewing taxes and levies on tea production after industry executives and farmers say the charges were putting them at a competitive disadvantage. Our Kenya tea growers say taxes and high costs of labor and fertilizers are hurting earnings and will discourage expansion in production.
Producers of Kenya's #1 export earner complain about a 1% levy on tea sold at a weekly auction and a 16% value-added tax on tea processed and consumed locally. The East African nation is the world's leading exporter of black tea, a crop that offers a livelihood to thousands of small-scale growers who complain not enough cash reaches them.
When you look at the market, it is doing well, but as farmers, we are not benefiting at all. I think the government has to look for ways in which farmers can be helped so that our income can go up a little.
The average price of Kenya tea was $2.98 per kilogram, or about 300 Kenyan shillings at the weekly auction last year. But small-scale farmers like Surma can expect to receive just about 45 shillings per kilogram before paying for labor. They say they need 60 shillings to survive or expand output. Joseph Lagat, a director at Siret Tea Company in Nandi, says that the farmers could produce more if they were guaranteed they could sell it at a fair price and if there was increased capacity in the factories.
The biggest problem, the challenge we have at the moment is the transportation of leaf from the field to the factories. Because of the distances. At the same time, the capacities in the factories during big periods will not accommodate all the tea. So you find that the farmers pluck up to 11 a.m. in the morning, actually, and stop, and that is supposed to go to the factory immediately.
Top buyers of Kenyan tea include Britain, Afghanistan, Egypt, Sudan, and Pakistan. Kenyan officials have also been holding marketing trips to Asia in a bid to increase sales of the commodity to countries like China. But poor returns and high cost of input risk driving small growers out of business. Industry analysts have for decades called for producers to invest in value-added export so they can earn more.
So I think the government should put a lot of effort in assisting the farmers and also in marketing our tea, particularly value addition, which we want to sell our tea. There's no point of selling our tea, bulk tea, to UK, and then you find Lipton selling again in our markets, in our shops. We should be able to sell direct to UK or to other areas when it's packed.
Kenya earned 125.25 billion shillings from tea exports last year on output of 399.21 million kilograms. A slightly stronger shillings means officials expect earnings to slip to 115 billion to 120 billion shillings this year.
And for the FMDQ OTC Market Intraday Analysis, join us after the break. Welcome back. Let's now take a look at the FMDQ OTC market, and I'm being joined by a fixed income trader with Diamond Bank, Ada Mbachu. Good afternoon, Ada. Thank you for your time.
Good afternoon.
So how would you compare the fixed income market yields and the current yields? I mean, the opening yields and the current yields.
Okay, thank you very much for having me. Well, for the bond space, it was a bullish market, and we saw yields moving up at about 20 basis points across all maturities. Current yields were 12.5% for the shorter maturities and 13.1% for the long maturities. The Treasury bills market, we saw a mixed reaction. The buying pressure was seen more at the shorter end of the curve, and we saw a bit of sell-off at the mid and long tenor maturities. The yields dropped slightly at the short end, while we saw about 22 basis points upward movement for the mid and long tenor maturities. Well, we can say the market was driven mainly by increased liquidity in the system owing to the federal allocation injection of about 143 billion. So as expected, market players try to invest excess liquidity in government securities.
Now, the market will be closing very shortly. You talked about the liquidity. Now, still looking in terms of liquidity, what should we be expecting by the time the market closes?
Okay, fine. Well, the market liquidity will definitely be sustained, and due to, like I mentioned earlier, we saw an injection of about 143 billion from the FAC allocation. And the market is still expecting a 96.3 billion OMO maturity this week. So currently, we have seen overnight rate drop to 3% from 4% from yesterday. And definitely, the market liquidity will be sustained, except the central bank comes in to mop up excess liquidity in the system.
Right. Now, in all of these analyses, what is your short-term outlook for the market?
For the short-term outlook, ideally, the inflationary pressures are still on, and we expect the yield to inch up slightly, though we have seen a bit of respite due to increased market liquidity. But I think going forward this week, we will see a bit of adjustment due to inflationary pressures.
All right, thank you very much, Ada, for your time. Now, Saudi Arabia's Deputy Crown Prince Mohammed bin Salman has unveiled plans to reduce the kingdom's dependence on oil and transform it into a global investment power. Prince Mohammed said the kingdom would raise the capital of its public investment fund to 7 trillion riyals. That's about $2 trillion from 600 billion riyals. He said the country expects state oil company Saudi Aramco to be valued at more than $2 trillion ahead of the sale of less than 5% of it through an initial public offering. Well, that's it on the program for today. Thank you for watching. I'm Chimizi Obiwago.